Good morning. We're about to get started on our webinar this morning for Thursday the 23rd of April. Let me just give me a hi or give me something in the chat box just to let me know that you are here, and we will kick off in a minute or so. Lovely to see some hands raising there. Good job. Well, welcome to our webinar on Thursday the 23rd of April 2020. It's lovely to be webinaring with you this morning. And today what we will be covering today on how to officially enrol for JobKeeper. The JobKeeper Payments, a very important subsidy for our businesses. We'll also have a look at some specific payroll processing requirements for those JobKeeper payments to make sure that you can receive those payments from the ATO. There's a few quirks on that payroll processing. I know we've got a number of our bookkeepers on this webinar, so I'm sure they will be across it as well, but definitely some tricks and tips to get our head around, there's no doubt. So I've got lots of information for you. I've got a number of frequently asked questions that I'll give you some responses to today, and then we'll have plenty of time for your questions this morning as well. My name is Jeni Wilcock. I'm a director at Sullivan Dewing, Chartered Accountants and Business Builders based in Caringbah. We continue to have huge responses to our webinars. We know that you really need this information. It's amazing how much we have all learnt since the 1st of March, the date of the first coronavirus case in Australia. These JobKeeper payments will be a welcome boost for many businesses to give them the confidence to keep paying their teams and to keep their teams employed. Over 850,000 businesses have pre-registered for JobKeeper, and it's a $130 billion program from the government. It's the largest single piece of government spending in Australia's history. So certainly something that we want to get as many big businesses accessing as we can. I will shortly share our presentation with you, and next to the share button is a chat box. And if you can just post your questions in the chat box, that would be fantastic. Thank you. Just post your questions as we go along, and I'll get to those at the end of the presentation. So welcome this morning, and let's get right into the presentation for you. Okay, so JobKeeper is live. It went live on the 20th of April, Monday this week. So how do we officially enrol to make sure that we can get those payments that we may well be entitled to? So a little bit of housekeeping first. Submit your questions as detailed. You will have had the presentation slides emailed to you, and following the session you will receive a recording of this webinar as well as a copy of those presentation slides. Okay, today we will be covering JobKeeper payment, how you can make sure that you are eligible before you enrol, the steps that you need to take to enrol in JobKeeper, some payroll setup tips, and then frequently asked questions and your questions as well. So JobKeeper payment, this is the payment that our federal government has put in place to support businesses to retain jobs. So first off, I wanted to be quite clear with you all on what JobKeeper was. So JobKeeper is the federal subsidy to assist businesses to retain employees during this COVID-19 crisis. It's a payment that is paid through the ATO, and it's paid for the periods from 1 April till 30 September 2020, so a 6-month period. It starts for businesses the month that they pass the revenue reduction test. So if you pass the test, for instance, in March or April, then these payments will start in early May. If you don't pass this test until June, then those payments will start for you in July. So enrolments opened on the 20th of April, and they are open through the business portal, the tax agent portal, and also the BAS agent portal. You must register by the 30th of April to receive the JobKeeper payment for your April wages. So right now we are in a critical time period that It's very important that you are testing right now whether you are eligible for JobKeeper and getting those registrations done so that the ATO is aware of your circumstances. Okay, so what do you need to do to enrol? The first thing you need to do is pass the turnover test, and there's two ways that you can pass the turnover test. The first way is by using the basic test, and the second way is by using the alternate test. So let's have a look at the basic test. So the basic test is where your projected GST turnover. Now, don't be misled by the words GST turnover. GST turnover is not testing the turnover on your BASs necessarily. It's more likely testing the turnover in your P&Ls. So GST turnover has just been used by the government to try and put some sort of definition around the amount of income to use when you are looking to meet this test. So the basic test is where your projected turnover for the test period falls short of your turnover for the same period 12 months ago by the required 30% or more. So if you're looking at March 20, you are looking at your turnover just for the month, not for the quarter ending March 20. You're looking at the month ending March 20 and comparing that to March 19. Now, the simplest way to do this is to actually run a P&L through your software system and do the year-on-year comparison. What was my revenue March 20 compared to my revenue March 19? Did I meet the 30% reduction test? So what's quite good about this basic test is that you can use any of the relevant months or quarters starting from March 20 or the quarter starting 1 April and running through to September. So what that means is if you can't meet that test for March and you can't meet it for April, then you test for May, then for June, then for July, all the way through to September until you do meet that test. Once you do meet that test, then you will be eligible to receive these payments from the government. Cash or accruals, and this is a question we have been asked many times. Do I run my P&L on a cash basis? Do I look at my BAS? How do I actually work out what revenue to use? So basically the ATO has come out and said that the default revenue to use is on an accruals basis of accounting. Now that means you need to run your P&L based on an accruals basis unless you are lodging your BASs on a cash basis. So every business tests on an accruals basis unless you are running your business on a cash basis. So an accruals basis means that you test based on invoices raised, not on payments received. So when you raise the invoice, that flows through to the P&L, that flows through to your income accounts. That is what you are testing on, not on the cash payments that you have received from your customers. So what the ATO has also said, and quite interestingly, is you can actually choose which one that you want to use. So if you are looking, we've got a number of clients, for instance, that are still receiving cash payments, but their invoicing has slowed right down. So they can actually choose to test based on their invoices that they have raised or based on the cash that they have received. So the government is being relatively generous here in letting you choose a number of ways that you can test your revenue in order to satisfy the JobKeeper revenue test. So the best way is to run a P&L comparing March 20 to March 19. If it doesn't work for that month, then try April. If it doesn't work for that month, then try May. Now, you don't have to wait for the end of the month to know that you're eligible. So we're close to the end of April now. If you know that your revenue is down and you know that you don't have a lot of work coming up for the next week or so, then you are able to submit your registration, enrol in JobKeeper officially at the ATO now based on projected revenue rather than actual revenue. Okay, so there are some things that projected revenue excludes. So JobKeeper excludes payments, the turnover, excludes the receipt of the JobKeeper payments. So when your business gets these JobKeeper payments, they're actually included as taxable income. Your business is taxed on those payments, but they don't form part of the revenue test. Turnover also excludes the sale of capital assets like vehicles, any plant and equipment that you sell, that is excluded from this turnover test. Any investment income that you're receiving, like interest or dividends, they also are excluded from this turnover test. And any supplies that you make that are not connected with Australia. So if you are running a separate company in New Zealand, you do not include that foreign income into this turnover test. If you are billing a foreign country from Australia, it's an export and that is included. So the distinction is, where is the revenue invoicing being done from? If it's being done from Australia, it's included. If you have a foreign company overseas, then you do not include that revenue. Talk to us if you have any questions on this. Okay, so a quick summary on the basic test. Number one, you identify your turnover test period, whether you want to use a month or a quarter. Identify the relevant comparison period, so the same period for a year ago. You then work out your relevant GST turnover, whether you're going to use a cash method or an accruals method. And just remember, your turnover is exclusive of GST, which is why we're suggesting people run P&Ls rather than rely on what's in your BASs. You determine the shortfall percentage, and we're looking for a fall of 30% or more. And so you do that calculation. What was it last year? What is it this year? What's the difference? What is that as a percentage? And we're crossing our fingers and hoping that we've fallen by more than 30% at this point. Of course, saying that if you're a fortunate business and you haven't fallen and your turnover has actually increased, fantastic for you. Okay, so then there's an alternate test. So if for some reason you can't pass that basic test, then the ATO has made provision for an alternate test. The only issue that we've got is that there's very little information about this alternate test that's been released by the ATO. They keep saying watch this space, so we really hope that they hurry up and give us some details on this. So this test applies when you have no comparison period. So for instance, if you've started a new business in the last 12 months, you might have been ramping up sales really well, but all of a sudden they have died right off. That would be criteria that the Commissioner would look at for you to pass under this alternate test method. The other category that we believe that they will look at is where you have had a significant change in your business. So you might have taken on new premises, you might have ramped up your number of outlets, you might have put in place some new product lines. The ATO will take into account that significant change in your business when considering whether you are eligible for JobKeeper. If you think that you're in one of those categories, let us know and we will come back to you as soon as more data comes out on that alternate test. Okay, so there's many businesses that run more than one company, more than one entity within their business structure. So what happens, what the ATO has said here is that when you are assessing whether your group revenue is less than $1 billion, they want you to add up the revenue of all of your businesses together to make sure that you still fall under that $1 billion threshold. So once you've done that, you then separate the businesses out, and that 30% drop in revenue is tested on each separate business. So you pull your group together to test for the 1 billion revenue, less than 1 bill revenue. If you meet that, you separate the businesses again and test that 30% drop based on each individual entity. And we had that very question from a client yesterday who was more than relieved that she could separate her businesses out and test them on a separate entity basis. If you have a GST group, and this is where you have more than one entity that is grouped for GST, which means you don't charge GST between those different entities. You have to work out the GST turnover for the group in the same manner as two separate businesses, and then you separate again to test for the fall in turnover. Again, any questions on that, just come to us. Okay, that was step one, and that was satisfying the turnover test. So step two, when we are looking to be eligible for JobKeeper, is we have to notify our employees. So you need to notify every single employee on your payroll that was on your payroll as at the 1st of March. You need to notify them that you intend to participate in JobKeeper, and you need to send them an employee notification notice. So every one of them has got to receive this notice, and they have to agree to be part of this scheme. Now, they may not agree, for instance, if they wanted to receive JobKeeper from a different employer. So you need confirmation from your employees that they agree and that nomination notice back from them. So that's got to be signed and back to you by the 30th of April. So again, there's only quite a small window of opportunity here. So get those notices out. Those notices are freely available on the ATO website. If you need a copy of them at all, just let us know. We can get you a copy. And we have certainly sent links to these out in our e-newsers that have gone out this week. Now, keep that nomination notice for 5 years, just with your business records. You don't need to lodge it with the ATO. Here is a sample of what this form looks like. It's really not a very difficult form. As employer, you complete this section just with your employer details, and then the employee completes this second section, signs it, dates it, and gives it back to you. Not a difficult form. Nowhere near as complicated as a TFN declaration that they sign when you first employ them. Okay, so who are our eligible employees? Our eligible employees are employees that we have that are full-time, that are permanent part-time, or casual, so long as the casual employees have worked for you for more than 12 months on a regular and consistent basis. Eligible employees also includes stood-down employees. They must be Australian citizens, permanent residents, excluding some temporary visa holders. Now, we have had a number of questions from clients about temporary visa holders. Most of them are not eligible. So if in doubt, you might need to check, but certainly I think work on the provision that most temporary visa holders are not eligible for JobKeeper. The employee has to have been employed by you as at the 1st of March, and they had to have been 16 years old as at the 1st of March. So if you had an employee that didn't turn 16 until April or May, they are not eligible. Now, your employer also must not be in receipt of JobKeeper from another employer. They can only receive from one employer. Okay, step 3, down to enrolling. So you enrol your business you enrol for JobKeeper via the business portal or the tax or BAS agent portal. So there's 3 different ways that you can do it. You can do it yourself through the business portal. We can do it for you through the tax agent portal, or your BAS agent can do it through the BAS agent portal. So a number of mechanisms there for you to do it. So we sent out some emailed instructions recently on how to set up that business portal if you hadn't already set that up. So if you don't have those and you need those again, please contact us and we will get those out to you. Some people have had some dramas with that, but keep persisting. Let us know any problems. So you then log into the business portal using your MyGov ID. You select on Manage Employees and select the link for JobKeeper Payment. It's not a difficult registration process at all. The information that you need is fairly basic. So let me take you through what we see when we register clients for JobKeeper. So we click on the various links, and what we get is this screen that comes up, and basically we're looking over here to click on Enrol You for JobKeeper. So I'll show you the next screens coming up, but I just want to point you to step 2 and step 3. So what the ATO is saying is that by 30 April, a business that is intending to use single touch payroll software to enable this JobKeeper functionality, they need to have updated their eligible employees and lodged that via their STP software before 30 April. So today we're at the 23rd, we've got a week now to get this done. Then from the 4th of May, anyone that is not using single touch payroll, they will be lodging their details with the ATO from the 4th of May on a new form that the ATO will create. We believe this will be a fairly simple form. And so that applies to businesses that have less than 40 employees and don't use single touch payroll. If you are a business with more than 40 employees and you don't use single touch payroll, there's another mechanism for you to use. So once you've done step 2, step 3 then will be the monthly declaration for JobKeeper payment. And what you'll be confirming to the ATO each month is which employees of yours this applies to, and also what the turnover is for the current month and the projected month. That's another form that's available from the 4th of May. So we've got some more things coming up. Okay, so the fields that the ATO is looking for us to complete, they want us to let them know what the test month used is. Is it March? Is it May, April? They want us to confirm that the fall in turnover is greater than 30%. We have to tell them the expected number of employees that we will be accessing JobKeeper for. And we also need to let them know if there is an eligible business participant. So this is somebody that may be the business owner that is not on the payroll receiving wages, but somebody that might be receiving director's fees, dividends, trust distributions, partnership profits, sole trader income. They are the eligible business participants. And again, it's fairly easy to complete that on the form. You also need to add in the contact details of the relevant person and also the bank details of the business. So not too onerous. Okay, so this is what the second page looks like after we hit the enrol button. So we need to tell the ATO that whether or not you are a registered charity, of which most of you are not, of course, and whether your turnover exceeded $1 billion. So in this case, no. And we need to then tell the ATO which is our test month, and our test month here is April, and also confirm that our turnover has fallen 30% or more. Now, what's going to be very important in this whole system, because the ATO, this is a system of self-assessment. At the minute, the ATO is not asking for details to prove that your turnover has fallen by 30%. But there is a good chance in the future that you will have to show them that support for how you have calculated that your turnover has fallen. So I suggest that you keep in a very safe and accessible place the details on how you have calculated your 30% drop in turnover. Very important. Okay, next thing we need to complete on the form is how many employees we have that are eligible for JobKeeper in the period from 30 March to 12 April, and then in the second fortnightly period from 13 to 26 April. So you simply put your number in there, and that includes all employees on your payroll that are eligible for JobKeeper. So if you have some people that don't meet the visa test, for instance, then they are not included in this number. If you also have some employees that are receiving JobKeeper from another employer, again, they're not included in this number. So you need to know your total that are just eligible for JobKeeper. Okay, so the next thing that you need to do is let the ATO know if you have an eligible business participant, and that is basically the owner of the business that is not on the payroll. If you run a company and you are on the payroll, then you form part of those employee numbers. If you run a company and you are not on the payroll because you simply receive dividends, you do complete this section. If you are unclear, just ask us the question. Now, for the eligible business participant, there are a number of criteria that need to be met. And the ABN that they refer to there is just the business ABN. You don't need a separate personal ABN to satisfy this criteria. So we simply tick the yes button that we've satisfied that once we have, of course, met all that criteria. Okay, the next section, fill in your bank account details for the business. So your company details, your trust details, your sole trader details, your partnership details. It's the business entity details that get completed here, and then you just fill in your particular contact details. Not hard at all. I'm sure we can manage this. Okay, once you have lodged that, you will get confirmation from the ATO that your business is enrolled for the JobKeeper subsidy. Now, I did notice yesterday when I went back into a business that that you can't tick that enroll button again. It comes up with a tick beside it saying that you are already enrolled for JobKeeper. So that's very reassuring to know. Right, so when you are an eligible business participant, so we have many clients that run their businesses through structures other than companies. They might be sole traders, trusts, partnerships, working directors. There is a separate form that you need to complete to be held with the form that your employees complete. It's the Eligible Business Participant Nomination Notice. Did you get all that? Okay, that notice looks like this, very similar to the one that your employees fill out. So again, if you can't find this notice, please come to us, but it's easily available at the ATO website, and we have included the link to it on the newsletter that we sent out just this week. Okay, once this is all happening, you will certainly need to submit once a month to the ATO a report. Now, in this report, you are reconfirming your eligible employees, and you can submit this report easily through the business portal, through your tax agent, which is us, of course, or through your BAS agent. Now, if your eligible employees change or leave your employment, you notify the ATO through that monthly declaration. So on that same form, you are letting the ATO know your current turnover and your projected turnover. Now, to be clear, this is not a retest of your JobKeeper eligibility. This is simply letting them know how your business is progressing, how the revenue of your business is progressing through this JobKeeper payment scheme period. They actually want to see that businesses are starting to lift their income, so don't be afraid to put those numbers in. It is just for ATO statistical purposes. Okay, the question that we are asked time and time again, I see it on forums all over the place. You only need to pass the revenue test once to be eligible for the JobKeeper payment up until 30 September. So if you've had a great month in March, but April has died and you pass it for April, then you are eligible right up until 30 September. If you then turn around and May picks up, June picks up, July, August pick up, you are still eligible all the way till 30 September. This is a fantastic mechanism that the ATO has put in, so we only need to pass that revenue test once. Okay, what I'm going to go through with you now, and this gets a little bit complicated, so I will keep this as simple as I possibly can, is spending some time on the payroll setup to claim JobKeeper. This is like the gift that doesn't stop giving. It just keeps going on and on. So our payrolls have got to be slightly changed to make sure that we can satisfy what the ATO needs to get these JobKeeper payments back through to us. So I can't emphasise enough, it's so important that we get this right. So don't think that you can merrily go along the way that you have always processed your payrolls without making any changes and receive JobKeeper. You can't. You have to make some changes. So if you don't make these changes, you just won't get the money from the ATO. So very important. And we actually have a very short time frame to make those changes before that 30 April deadline. So you have to get onto this. So what you have to make sure is that your payroll categories are set up exactly as the ATO stipulates. Your payroll software provider will have sent you out, I have no doubt, some information on this. Don't ignore those emails. You need to follow what they are saying. And they are quite detailed. Their support lines, I know, are very busy, but they are very helpful. So please follow that guidance. I'll give you a little bit of information today, but the best source of information on this payroll setup is your payroll software provider. Okay, so the ATO has stipulated that there are 3 payroll categories that you need to have set up in your payroll system. This first one is the JobKeeper top-up. And this is for employees that are earning less than the JobKeeper amount, less than that $1,500 per fortnight. This is where you need to pay them a top-up amount. And I need to stress that this top-up amount is actually an allowance. It's not a gross wage as such, it's an allowance. And it's got to be set up in your payroll system as such. That is category 1. Category 2 is the JobKeeper Start. Now, this is what you add. This is the payroll category that you add the first time that you are lodging a pay run with the ATO through single touch payroll to let them know that you have started paying this employee through under the JobKeeper scheme. If you don't have that payroll category within that pay run, you have not alerted the ATO and you will not get the $1,500 payment. So very important to have the top up when you're making the top up for your employees, and very, very important that you alert the ATO to the start of the JobKeeper payments for each individual employee. Okay, so we got that, 2 new categories there. Now this last category only is required when you stop paying an employee before the JobKeeper scheme finishes. So you might have an employee that is no longer on your payroll for whatever reason. They've resigned quite ordinarily. You stop paying them. They are now ineligible for the JobKeeper through your particular company, and you just add that payroll category of the JobKeeper finish date. Most likely you will use that very seldom in the next 6 months, but if you need to, that category is there. The key 2 categories are JobKeeper Top Up and JobKeeper Start. Okay, so you use those when you're lodging through single touch payroll. Now, we certainly recommend for any of our clients that is not yet using single touch payroll, we absolutely recommend that you start using this immediately if you can. We know that it starts for everybody on the 1st of July. All those exemptions pretty much finish come 1 July. So you might as well start using that now to enable the processing of the JobKeeper payments much more simply for you. Thank you for those questions that are coming through as we're going. I'll get to those at the end of the presentation. Okay, now our two main small business software providers are Xero and MyOb, and they have happened to take different approaches to how you will process your payrolls in their software, which is fabulous for the lovely bookkeepers and the accountants like ourselves. We enjoy being across different processing for all the various different providers. I'm not going to go through these in detail, but I have got quite a bit of detail over the next few slides for you if you are both a Xero user and a MyOb user. So first up, if you are a Xero user, now the big difference between the two software companies is that Xero has preset these payroll categories up for you. MyOb has not set these payroll categories up. You need to go and set them up yourself. So if you use Xero, quite a bit of the work is already done. If you use MyOb, there's a few extra steps that you have to take. So in Xero, so you need to set up or update your JobKeeper pay items. So to be clear, JobKeeper is an allowance pay item called JobKeeper, and the payment top-ups category has automatically been set up for you. This pay item is exempt from super. Now, if you've already gone and set up a payroll item for JobKeeper, which isn't an allowance, or have followed any past instructions from Xero or anybody else, you're going to have to go and edit that pay item so that it makes sure that it complies with the ATO's format. So any pay runs that you've filed using custom or old JobKeeper pay items need to be adjusted. And to update that pay category, you just file an unscheduled pay run via single touch payroll before the end of April. It's not too hard to do, you just have to make sure that you do it. If you plan to pay your employees JobKeeper payment on an ongoing basis, you add the pay item to their pay template. You could create an additional JobKeeper pay item if you need one for calculating super guarantee. Okay, again, this is some information for you. Go back to your payroll provider, look at what they have published, look at what they have sent to you. They have made all this very clear. Okay, so you have to enrol your employees through Xero for JobKeeper, and they have a particular section that you use. So you click on payroll tabs, visit our payroll support page, enrol employees for JobKeeper. Review your employee list, confirm your eligible employees, then add your JobKeeper start date next to their names. Now, you need to see our red note at the bottom. Please take care when setting the start date. Once you click save for reporting, the start date is locked and can't be undone. So be very careful that you are using the correct start date for your employees. Okay, if you want to claim a payment for an eligible employee, you need to set a start date for them, even if they won't receive the JobKeeper top-up in a pay run. So if you're claiming a payment for an employee who earns more than the $1,500 a fortnight, you still select a start date for them. So basically, everyone that is eligible needs a start date in Xero. Okay, so there are some instructions here to adjust previous pay runs. If you have already made pay runs for this month and they don't include the relevant categories, please follow those instructions. Right, now having a look at MyOb. So MyOb, as I mentioned, is different to Xero in that you have to set up these categories yourself. So we need you to set up a couple of different things. So we need you to set up a new income account, and that account could be named JobKeeper Subsidy. I don't mind if you call it Government Subsidy JobKeeper or JobKeeper Subsidy, whatever you choose, but clearly label it JobKeeper. Now make sure that has an N-T tax code. It doesn't have GST when you receive that payment from the ATO. So when you actually get those payments from the ATO into your company bank account or your business bank account, you'll allocate those to this revenue code that you have set up. So as well as the income account, you need to set up 2 new payroll wage allowance categories. So the first one is the JobKeeper top-up, and the next is the JobKeeper start. So let's have a look at those. The JobKeeper top-up wage category. What you do here is you go to the Payroll Command Centre and then click on Payroll Categories, Wages tab, and click on New. So for the wages name, you enter JobKeeper top-up. Now, see exactly as we have it there in capitals with a hyphen, that is exactly how you have to have it set up. For the type of wages, you select salary option, whether it's salary or hourly based. For ATO reporting category, choose allowance other. Then you click on the employee, select the employees you'll be paying during the JobKeeper scheme, click OK, and then save that wage category. And then you have to stop the super calculating on your top-up payment. Now, of course, if you choose to pay super on that top-up, that's fine, then you don't do this step. If you are choosing not to pay super on your top-up, you don't have to pay the super on that top-up payment, then these are the steps that you need to follow to stop that super calculating on the top-up. Now, this is a busy little slide to show you, but what is very important is these numbers over here. So what MyOb has set up is a separate number depending on the date that you enter the JobKeeper scheme. So for the this is to start the wage category. So you actually need to set up this this new payroll category that is called JobKeeper-Start-FN. Now the XX refers to this number here. So if you are starting right at the start of this scheme on the 30th of March for pay runs that started between the 30th of March and the 12th of April, your wage category is JobKeeper Start FN01. If you are not eligible until let's say the 22nd of June, then you would have your payroll category as JobKeeper Start FN07. So from the date that you are eligible is the category that you are, the FN number that you use to attach to your category. A little bit confusing, I understand. Again, talk to us if you're not sure, but this is your title for your category. This is your number for your category. Okay, so we've got some other instructions there. Select the salary option, regardless whether they're salary or hourly based. Choose allowance other. Click employee, select employees you'll be paying during the JobKeeper scheme. Click OK, save that wage category. Note in red down the bottom, very, very important. The wage category must match the above. All capitals, hyphens, no spaces, and use the correct number. Really important, else you're just not going to get your ATO payments. Nice that we have these particular quirks between our software providers, isn't it? Okay, now, when you run your first JobKeeper pay run, now this is really important and this is something that needs doing before the end of April. So you need to run basically a pay run that includes your JobKeeper Start payroll category. So what you're going to do for the pay run is you will add this category to your pay run. So what we want you to do is add that category and just record it as a 1 cent pay run. Increase pay-as-you-go withholding by 1 cent as well, just to balance that to nil. And that is the category that you will use in the employee's pay that will then be lodged through single touch payroll that will alert the ATO to the fact that you have started paying JobKeeper payments to this particular employee. So just know you have to run a specific first pay run to include that JobKeeper Start category. Now, if that's for somebody that would have a wage over the $1,500 per fortnight, if they are under the $1,500 per fortnight, you use the JobKeeper/top-up wage category. But these categories have got to be in your pay runs for those first periods starting the 30th of March, for the first period that you are eligible for. Some extra detail here on what to use. Okay, now I can't stress enough, the ATO has put some strict compliance rules in place for anyone that is trying to manipulate this JobKeeper system to receive these payments when they shouldn't be. So, so please know that there will be audit activity, and I absolutely encourage you to do the right thing, and let's get this funding out to the employees that really need this funding. There are large penalties, there's threat of imprisonment. We absolutely are encouraging all our clients to do the right thing with JobKeeper. All right, that's plenty of information for you. What I'm going to do now is go through some frequently asked questions. We are, as many of you bookkeepers out there as well, we are asked hundreds and hundreds of questions every single day on this, and let me give you some common questions and some answers that we have received. So first up, should I change my pay cycles? If I had $1 for every time this question was asked, I'd be a rich lady. So no, you do not need to change your pay cycles. You leave them as they are, whether they're weekly, fortnightly, monthly, you can leave them exactly as they are. So what we have given you here is a table that the ATO has put out that essentially works out for you whether you're paying weekly, fortnightly, twice a month or once a month, how much you need to be including for those employees by the end of the month. You don't have to reflect the ATO's fortnights, you just have to pay at some point within that fortnight. Now, I was looking at this for a client yesterday that pays weekly, and as it happens in April, there will be an extra week. They pay on a Wednesday. There's actually 5 Wednesdays in April, so they will have 5 payments go through. But when we look at the ATO's fortnightly criteria that they have put in place, you just need to have those payments that fall within those fortnightly dates. Now, the 5th payment for any business that pays on a Wednesday actually falls after the 26th of April and will fall into the first fortnight in May. So do not worry about changing your pay cycles, and do not worry about trying to align with the ATO's fortnights. Next question. What if I've already run my April pay runs? So if you had already gone and set up April pay codes, you need to go back and set up the ATO specific pay codes, and you need to run an unscheduled pay run to correct the codes. Now, I had a client do that yesterday, and it really didn't take her very long at all. I think it took her about 40 minutes to do the whole thing, to set up the pay categories and to run another pay run. So it just has to be done. Just don't forget to do it. If you are running an unscheduled pay run just to get these categories into your employees' pay runs, then just run that as a nil pay run. Okay, how do I pay an eligible business participant? So, you know, it's quite easy for us to work out how to pay our employees. We just pay them through our payroll functions, through the wages system. But where we have an eligible business participant, so somebody that might be that run their business through a trust that don't get wages payments, somebody in a partnership that doesn't get a wages payment, a sole trader that doesn't get a wages payment, a director that just gets a dividend. There's actually nothing in the legislation, and this is quite a quirk. There's nothing in the legislation that says that you have to pay this category before you receive the money from the ATO. So I would suggest for all of our eligible business participants, you would just continue to take your payments from your business structure in the same manner that you always have, and then you declare your information to the ATO on the monthly form, and the ATO will then pay you. So these people do not have to go on the payroll. So we don't need trusts running around setting up their business owners on the payroll. We don't need working directors set up on the payroll if they're not already there. We don't need partnerships to be setting up payrolls, sole traders to be setting up payrolls. So with your employees, you have to pay the $1,500 before you get it, and I know that's a cash flow issue. I understand that. There's really not a lot of help there for that. But with your eligible business participants, you don't have to make those payments before you get them. Quite a different distinction. So once you receive those payments, if you're in this category, if you run your business through a company, then you pay this payment out as wages. Now, it's an important thing to note here for companies. So this $1,500 that comes in for the director that is not on the payroll, that comes into your company as taxable income, taxable to the business. Now, if you choose to take that amount out as a dividend, there is no tax deduction to the company for a dividend. So you really need to take that payment out as a wage from your company. Okay, so that means putting you at, sorry to contradict what I just said, that means putting that company director on the payroll so that they can receive the payment as a wage, if the company wants the tax deduction for that payment. If you want to take it out as a dividend and pay the company tax on that payment, that's fine as well. Now, if you're a trust, that payment comes out to you as a trust distribution. If you run a partnership, that payment comes out to you as a partnership distribution. If you are a sole trader, it just comes out of the business in the same way as you already take your money out. What if my turnover later increases? Basically, it doesn't matter. You only have to pass the turnover test for one period. You're then eligible to receive the JobKeeper until 30 September. What if my turnover ends up being correct? And this is a really valid question. So if you forecast that your turnover is dropping greater than or equal to 30% and then it doesn't, the Commissioner has a small discretion there to not claw back the JobKeeper payments. He's not given us any parameters yet on exactly how much that discretion is. So I don't know yet whether 29% is okay, whether 27% is okay, or what is okay. So let's go for satisfying that 30% drop first. The issue that we've got is if you are later determined to not be eligible, you will have to pay the money back. And the risk that you've got is if you've paid this money out to your employees and you're later not eligible, then you won't get the money back from your employees and you'll have to pay it back to the government, so you'll end up out of pocket. So it's really important that you make sure that you satisfy this test and that you keep a record of your calculations for the test. Okay, question I've been asked many times, does JobKeeper apply to the contractors that I pay? No, it does not. JobKeeper only applies to employees and to eligible business participants. The contractors, if they are eligible, can apply for JobKeeper themselves through their own entity. When will I receive my payments? A really good question. So JobKeeper operates on a fortnightly basis. The first fortnightly period is the 30th of March to the 12th of April. The first payment that the ATO will make will be from the 4th of May. Now, I have heard it will be around the 13th of May. They do talk about 2 weeks after the end of the month. Let's see how quickly they can get them out. We certainly saw with the cash boost that the ATO has started releasing those before the 28th of April, the date that they had said that they would be released. We've seen the cash boost released actually from the 19th of April, which has been fantastic. Okay, so our first payment will cover payrolls from the 30th of March to the 26th of April, and the ATO will make the payments fortnightly, 14 days after the end of the calendar month that the fortnight ends. Now, that is a reasonable delay for the businesses that are struggling cash flow wise to make these payments anyway. You have to note that they're not coming out to you until 14 days after the end of the month that the fortnight ends. So if you're in May and you've paid for that first fortnight, you're not going to get that money back. So you're in May, you're not going to get that money back until mid-June. So it is quite a time delay here. So the ATO is relying on businesses to have sufficient cash flow to fund these payments, which can be extremely difficult in some circumstances. Okay, this is a very valid question. Can the ATO offset JobKeeper against ATO debts? The ATO says no, they will not do that, and few says a lot of clients. Okay, down to question time. So I can see that we have had a lot of questions flowing through. Let me pull those up now. I'll exit out of this presentation for you and let's get those questions happening. Okay, first question from Lucy, one of our lovely bookkeepers. Are stimulus package funds received excluded from calculations when determining your 30% loss? Yes, they are excluded. They are not included in your 30% loss calculations. Great question. Next question from Danielle. Due to the nature of my business, I don't get paid for 2 months after doing the work, so I'll be seeing the losses on my balance in my accounts from June onwards, even though I've had no new work since mid-March. How do I prove to the ATO that I've suffered a loss from mid-March? So you, as I mentioned in the presentation, you can assess that loss on a cash basis or an accruals basis. So even though you're having cash payments coming into the business from your customers, you aren't raising new invoices. So the very simple way is to run a P&L through your software system and accruals P&L, and that will show the fall in revenue for March, or if not for March, for April. So just to be clear, to be eligible for this very first payment, you can satisfy this revenue reduction either in March or in April. So, so for you, Danielle, if you're having trouble working that out, let me know and I'll jump in and have a look for you. But you can absolutely assess on that accruals basis, not on that cash basis. Next question from Susie. With a JobKeeper employee notification form, even if we are not eligible in April, but maybe in the coming months, do we need to get the employees to return this by the end of April? No, I would suggest that it's you need that by the end of the month on which they are first eligible. So it's really, you know, the ATO process says go to your employees, let them know that you're participating, send them the form, get their consent. So if you're not eligible until June, for instance, then you're not going to go to your employees until June to say we're starting to enter this system. So just have that form completed by the end of the first month that you are eligible. Next question from Belinda. Do you only enrol once you have met the 30% criteria? Yes, that is when you enrol, once you have met that 30% criteria. Now, just remember that that can be on a projected basis. So I wouldn't be enrolling if you were projecting in June that you would not be eligible. That you would be eligible. So at the minute, if you are not eligible for March and April, you enrol now. If you're going to be eligible in May, I would wait a little bit to enrol until you actually are eligible. But based on that projected turnover is fine. You don't have to wait till the end of May. If you know in May you're going to be eligible, you can enrol at the start of May. Okay, next question from Benjamin. One of my employees is casual and has been with me for 12 months. However, he has another full-time job. His employer will not be using JobKeeper. It is my understanding he does not qualify as he has a full-time job. You are spot on, Ben. So anybody that has a full-time job, even if they are not receiving JobKeeper in that full-time paid position, they are not eligible to receive JobKeeper for you. So that would be one of those people through your payroll system that you mark as ineligible. You won't receive the form back for them, and you won't be submitting a JobKeeper payment for that particular employee. Okay, question from Lucy. If a labour hire company is used, I understand that it is the labour hire company that needs to apply for JobKeeper. However, is the labour hire company then obliged to pass any funds onto their client, especially if they are still using that labour hire and paying for it? And that is a great question, Lucy. I don't believe that the labour hire company is obliged to pass those payments on. So what you've got to look at, so the labour hire company is a standalone business. So their revenue is generated by its the clients that hire out the people. So if the labour hire company it satisfies the 30% drop in revenue, it registers and it receives the payment for those workers that were on its books as at the 1st of March. It will then pay that $1,500 out to those workers. You've got to keep going back to the government's idea that they are trying to get money into employees' hands, not via Centrelink, through our businesses, so that our businesses remain engaged with our employees. So the company that is using the labour hire services, they will not get, I would imagine, I don't have clarity on this is just logic, I don't believe that they will get the subsidy back from the labour hire company. So if their business themselves is eligible for JobKeeper, they will only get it for the employees that they have on their books, not for the labour hire people. Okay, let me grab some more of your questions. From Richard, are exports included in the turnover test for the basic test? Yes, Richard, they are included. So the only revenue that is foreign revenue that is not included is where you actually operate a separate entity overseas. So if you operate an Australian-based company that exports to whichever country they export to, those exports absolutely are included in the basic test. From Sophie, we have already started paying employees JobKeeper. Does this mean we cannot claim back? No, Sophie, that doesn't mean that at all. So what you have to do is you have to go back and amend those pay runs that you have run to add that specific payroll category into those pay runs. So what you've got to remember is that right now, the ATO doesn't know that you've started paying employees JobKeeper. So these payroll categories, all it is doing is alerting the ATO to the fact that you have started paying JobKeeper, so they know who to pay you the money for. So what you've done is perfect, but go back and amend and add that JobKeeper payment category. Another question from Sophie. Where we have not paid employees who have been stood down, do we back pay for that period? So employees that you had on the books as at the 1st of March that you have since stood down, you put those employees back on the payroll, back to the 1st of March, and you start paying the $1,500 per fortnight. You make sure that now, those employees that were stood down, that $1,500 that you're paying is actually a full top-up payment for them. So you would use that top-up payment category for that full $1,500. That amount is not subject to super because they're actually not performing any hours work for you. So just make sure when you are paying them that you use that JobKeeper top-up payment category, lodge that through your single touch payroll, and you'll get the reimbursement through from the ATO. If you have specific questions, Sophie, just give the office a call. Just speak to your client manager after this. But yes, put them back on the payroll from 1st of March and start paying them. Okay, question from Richard. If your company only qualifies by passing the turnover test for the month of May only, do you receive JobKeeper payments from 30 March to 30 September, 1 May to 30 September, 1 June to 30 September, or another period? Very specific question, Richard. Good job. Okay, so if you pass the turnover test in May, then you are eligible for your payrolls starting the 1st of May to the 30 September. So B for you, Richard. So whichever month that you are eligible for your pay runs for that entire month up until 30 September. So if you don't qualify until the 26th of June, the payrolls starting 1 June to 30 September are what you are eligible for. Okay, next question. Do you register the start date for employees per the start of the period or the date the payment has been made? It would be the payroll period. So if your payroll period starts the 30th of March, the date that they are eligible is then from the 30th of March. I might clarify that one and come back to you actually. That is a good question. Okay, another question. What happens if your fortnightly pay run ends on the 3rd of April? Would a $750 JobKeeper allowance apply to the first period? So what you need to not look at is that it's a fortnight ending the 3rd of April. So what the ATO is looking for is a pay run from you in that first period. Now that first period is the 30th of March until the 12th of April. So your pay run on the 3rd of April falls in that first fortnightly period. So yes, that would qualify. Okay, is that quite clear? So it doesn't matter the fortnight that your payroll period is ending or the week that your payroll period is ending. It's that you've made a payment to your employees within that fortnight that makes them eligible for JobKeeper. Okay, another question. What happens if we meet the income drop of 30% in one period and start claiming JobKeeper, but then we don't meet the test thereafter? That's a question from Brad, and thank you, Brad. So you only have to meet the drop in revenue once. So if you meet that test for April and you don't meet that test then for May, it doesn't matter. You've met the test once and you can then claim the JobKeeper right up until 30 September. Thank you. Good question. Okay, any other questions that you've got, just keep posting them. Okay, so a question that I've been asked a number of times from employees, from businesses: should I apply for the job seeker and the JobKeeper at the same time? So they are exclusive payments. You don't get them both. So if you had employees that had already applied for job seeker before these JobKeeper criteria came out, then you put them back on the payroll and you start paying them through JobKeeper, and they will then notify Centrelink that they are receiving JobKeeper, and that would probably stop their job seeker payments. Now, the job seeker payments is about $1,000 a fortnight. The JobKeeper payments is $1,500. So far better off that they access JobKeeper than job seeker. a question that is asked and is in the press quite prevalently at the minute. How do you afford to pay the $1,500 when your business has no income? So the only thing that the ATO has said very unhelpfully is go back to your banks and try and take out a loan. We've got clients that have lent money from, that have borrowed money from family members to make these payments, but the ATO is really wanting you to access business cash reserves to make these payments, and that is going to be incredibly difficult for some businesses. But really the message is you use whatever mechanism you can to create the cash flow for you to be able to pay these payments. Another question that we are asked very often is, if I'm receiving the apprenticeship subsidy, the 50% wage subsidy for apprentices, do we still get the JobKeeper? So what's important to note here is that apprentice subsidy started on the 1st of January and that goes through till the end of September. So if you are receiving that wage subsidy for your apprentices and you later become eligible for JobKeeper, what I suggest you do is claim the apprentice subsidy from the 1st of January until the date that you can start JobKeeper. When you start JobKeeper, you put those apprentices through on JobKeeper. And yes, I agree, they will be getting more money, but that is what their entitlement is. Another question from Michael. If revenue has decreased by 20% but expenses have gone up a lot, is there any provision here for the alternate test? I think the answer is going to be no, Michael, unless you can prove that your expenses have gone up because of the change in nature of your business. So if your expenses have gone up because you have expanded into 2 or 3 new sites, for instance, then there may be provision under the alternate test. But if it's just, if there's no expansion reason or business acquisition reason or fairly significant reason for those expenses going up, then that 20% drop in revenue is just not going to meet that test. I'm sorry about that. This is a tough test. In some aspects it seems very broad, but in some it's incredibly tough, and we really hope that this gets out to the people that need this JobKeeper payment. Question that I've been asked a number of times: are permanent employees who have been employed for greater than 12 months eligible, for less than 12 months, eligible for JobKeeper? Yes, they are. So if you've got a permanent employee, the only criteria is they had to be employed by your business on the 1st of March. So if you started that employee sometime in January, they've not been there for 12 months, but they're a permanent employee or even a permanent part-time employee, they are eligible for JobKeeper for your business. Now, the only 12-month test comes in with those casual employees. If you've got a casual employee that's been there for more than 12 months, but they do really erratic shifts for you, they're not eligible. But if you've got a casual employee that does the same 3-hour shift for you every single week and has done that for more than 12 months, then they are eligible. Another question from Colin. Our business base is cash-based. However, our invoicing for March is 30% down on March compared last year, so I assume this complies. So Colin, yes, that does comply. So you can test this, as I said, on a cash basis, only if your BAS period is cash-based, only if your BAS registration is cash-based. So if yours is, you can run a P&L through your software system on a cash basis and test March 20 versus March 19. If you satisfy that 30% drop, then you can register, you're eligible, and then you are eligible then until September. It's a really good question. What if my employee's wage fluctuates due to the hours that they work or due to some commissions that they get? Those people are eligible for the same $1,500 that everybody's eligible for. Now, if in this particular fortnight they were receiving more than $1,500, you still receive the $1,500 from the ATO. If in this fortnight they've dropped down to $1,000, you have to make a top-up payment to them using the appropriate payroll processing code. So you make your top-up payment and then you claim back that full $1,500 from the ATO. So it doesn't matter if they have variable income amounts per fortnight. You then just use that top-up payment mechanism to keep them up to that $1,500. What if I just opened my business and I have no employees yet? So an example I have for you is a client who runs a beautiful floristry business, only a young girl. She started that business this current financial year, and what the ATO criteria says is you had to have had in your 2019 tax return business income under that ABN, or you had to lodge a BAS in this current financial year to be eligible for JobKeeper. Now, unfortunately for this young lady, there was no business income in her 2019 tax return. It started this year. Now, her turnover is not yet 75,000, so she's not actually registered for GST. So unfortunately, she will not be able to access those JobKeeper payments, and I've encouraged her to access through Centrelink the Job Seeker payments. All right, good job. I think we've done well. We've had a number of questions today. Yeah, fantastic. All right, I think I've answered all your questions. Please, if you have any other questions, just come to us. We are fielding these questions all day, every day, and more than happy to answer them for you. So if our response times are a little bit slower, please be a bit patient with us. You can imagine we are having volumes and volumes of questions and trying to get back to all our clients as quickly as we can. Support our bookkeepers as well. We know that they're inundated too, but just know we are here to support you. We are here to help you, and we really hope that you all come through this in a very positive manner. Take care, guys. Lovely to webinar with you this morning. Bye for now.